a lot of people talk about how much money they made in a 100 bagger, but they put hardly any money in it. It's not just about the percentage gain on your purchase price. It's also about the weight. If a stock delivers you, a 15% return per annum, and you had a lot of money behind it, and you held it for 10 years, you're going to make more money than a stock that went up 20x, but you had hardly any money invested in that. Uh, so what matters is how your portfolio does over a long period of time. So instead of, again, goes back to the casino side of the stock market. There is this element, there is the investing side, which is like people are treating it as investment in businesses, and as they become more valuable over time, their wealth will increase over time. On the other end, we have day traders, and somewhere in between, we have short-term investors who are buying stocks, but they expect too much from them and they want to get rich quick. The moment you move away from viewing the stock market as a place to get rich quick, but to just view it as a place to invest in a business or a bunch of businesses run by really good quality people, bought at reasonable valuation and holding on to them, the problem becomes far different than the problem of a day trader or a very short-term oriented investor. Because you don't need multi-baggers, to be honest. If you as I mentioned, India is a growing market and there are so many more companies that are coming to market. If you can compound your wealth at a rate which is a lot more than what the FD rate is, I think that's good enough. That's going to make you rich over a period of time. And while accomplishing that goal, you may end up with not a single stock that was a 50x or a 100x. So my answer here is that you don't need multi-baggers, but by multi-baggers, I mean, 20, 30, 40, 50x. But if you do get them, then obviously it's a good, it will obviously contribute to your overall returns. But important thing here is to understand the mathematics behind a 100 bagger. A 100 bagger is something that went up 10 times and it went up 10 times again, and you haven't sold it. And think about how difficult it is for somebody to see a stock become 10x its purchase price and he still held on for the next 10x. That almost never happens. So when we talk about these multi-baggers and the desire for these multi-baggers and the contribution toward overall returns, it's far easier, I think, to implement a strategy of expecting reasonable returns from your investment in a bunch of businesses, exactly what Ben Graham taught us, and not just chase the casino side of the stock market where you're trying to get rich quick by investing in multi-bagger that will go up like 20, 30 times in a year or two.